The FutureTrend channel is again with you, and we're starting our analysis of euro crosses. Here the situation is a little bit contradicting, as for example regarding the euro yen. As you know, the United States dollar is in strong demand now because of rising United States government paper yields. And that means that both of euro or Japanese yen still depreciating against the United States currency. From the point of view of risk aversion, probably the yen is in a more favorable position to appreciate right now, because higher United States real interest rates should sooner or later dampen the sentiment in the stock markets, and that means that probably the euro yen still has potential to go back to the south in case of rising risk aversion sentiment. Let's see the chart in the euro yen right now. As you can see, we are very close to break below in an immediate bullish trend line located around 132. Let's say 132.10, and that means that probably in the nearest future the euro yen should remain under the pressure. Anyway, a successful break above 133 should result in the higher rates for the pair from technical point of view. So here we still remain undeciding, and we suggest that probably it's time to wait and see, probably to stay aside from the market at the moment. As the euro sterling, here the situation overall longer term should remain bearish while we're trading below moving average 200 daily line, which located around 0.8883. Also here lies a kind of a longer term downtrend line. All in all, the situation should remain bullish from a short-term perspective, but bearish from a longer-term perspective. That's probably it's time to also here to stand aside, like in other euro crosses. As regarding the euro Swiss, as we suggest, it's ripe for a correction after testing and slightly overshooting the psychologically important level of 120. We suggest that it's ripe for a correction, at least towards its immediate uptrend line located around 118.60. From a longer term point of view, the pair should remain supported while trading above longer term uptrend line, which lies today around 116.10. All in all, we suggest that it's time to sell the euro Swiss, and only a decisive break above 120 should result in the higher printing of this cross. And the euro ruble, the ruble market will open in 20 minutes. We still suggest that because of the threat of new kind of sanctions from the side of such kind of countries like United States or United Kingdom against Russian Federation, the Russian ruble should remain under the near-term downside pressure. And that means that probably regarding the euro ruble, any kind of further corrective move closer to the previous upper threshold around 72 level should be used as a buying opportunity for the euro ruble at the moment. We still suggest that the pair should sooner or later went back to previous highs around 80 level. Anyway, right now it's hard to say that the Russian ruble will easily succeed the 80 level and goes much higher. We suggest that approaching the 80 barrier there will appear a kind of stronger selling interest in the currency. Anyway, our main priority